All right, team. Very good evening, I should say, to your Sunday the 14th. It's 9 o'clock my time, so predominantly it's 8 o'clock where it really matters in the UK. Wags, nice of you to join me. Appreciate the company. And to all of the rest of you who I haven't really been in too much of contact with for a while. Hope you're all hanging in there, doing well, managing your risk first and foremost, and trading responsibly. I am very much so back in the markets. I have missed it. As I've mentioned, it was a bit of an accidental week off, I'll be quite honest. Took my last position, I think that was on GCAD. And then after that, I pretty much didn't do anything else at all. Just enjoyed a bit of life for once. But I'm very much so back in the mix and ready to start the week now, pretty much. So we'll start from the top as we always do. So I hope you're all well. The DXY. So I'm happy to see that the analysis is still holding quite well. I wasn't as lazy as you might think. I still did go over the charts, so just make sure, triple check that everything is still in order. And where I'm really focusing my attention is on this weekly order block. So top right hand chart, you see it there. Now, am I expecting a rejection from that higher time frame order block? Well, potentially, but my overwhelming bias is that we may start pushing further towards the highs. Now, of course, for us to understand that and trade it, then in order for us to look for long positions on the DXY, then evidently what we would need to see is a weekly candle closure above that order block to have the confirmation via the weekly time frame as a result of using the weekly order block as confluence. And then, of course, once that weekly candle would have closed, we'd be waiting after this high to be created. We'd then be waiting for the higher low for that higher high continuation. However, what I like is the fact, well, I'll speak for myself. I'm not trading the DXY, but I very much so am using it for immediate confluence. So, with all that in mind, still refined within that weekly order block, we have indeed respected the refinement within the daily time frame. So the only remaining daily order block, bottom right hand chart now, when we look to refine this area down, is here. And as you see, the importance, not a single daily candle has closed above that area. Now, what I do like is, I guess that would have been Thursday. The Thursday candle closed bearish. And why is that of any significance? To show us that, okay, potentially there are two trails of thought at the moment, potentially as a result of this break of structure on that weekly time frame. This indeed could well be the high that's creating breaking structure to the left. After the high, I've got the higher low into a point of interest. This weekly order block held and started pushing price slightly up again towards those highs to potential, as I've said, potentially create that higher high. However, we now have to revert back to our analysis and understand, well, actually, nothing has broken just yet. So, although I could well be anticipating DXY strength long term, until at least then I see a daily candle closure, let's say above that daily order block, now the same protocol that we're using on the weekly, now onto the daily, I am still pretty much forced to be at least for a day or until I see a daily candle close above that daily order block, I'm still pretty much sell bias on the DXY because it is respecting those higher time frame points of interest. And then the question is, well, if I do all of my analysis and then ignore them anyway, well, what's the point in doing them? So therefore, we rely upon them until proven otherwise. If we're not comfortable to then foresee shorts coming out of the DXY, it doesn't necessarily mean we then take longs, but what it does mean is that we sit on our hands until longs are then confirmed. So at the moment, very clear for me that it's DXY shorts potentially to come out of the market. Whether I agree upon that or not, well, remains to be a different story based upon the cross pairs that we'll get to at the moment. However, that is the thought process, and that's why we're able to forecast both directions and understand that we can be wrong. But whether or not you want to take, for example, DXY shorts, if it makes sense on the chart analysis, but you're seeing higher time frame confidence to suggest otherwise, potentially just sit on your hands and see how the day or the week plays out. Nevertheless, we're using it as confidence. So when we start to refine these areas down, we're only looking for a reaction from these areas. Now, when we refine this weekly, daily order block down, look at where we are. Two nice points of interest on that 4 hour time frame, illustrated by these two red arrows that suggest to me that there are two 4 hour order blocks that I would really like to see a rejection from. Now, price came up into that 4 hour order block, had a beautiful push down from that area. Price came back up, and the importance, we respected it. Then we had this beautiful bearish engulfing candle that took out pretty much a couple of days worth of price. Well, okay, a day's worth of price action, I'll be real. It's this 4 hour candle just there. Left us nicely with a 4 hour order block again to start using. And the reason why I like it is if we make one line, if I say one line will do it, then have a deeper look at structure and a price action to understand, although we're still seeing these signs, how we could still be wrong if we were looking to trade the DXY long-term shorts. Because if we look at basic price action and structure, the most recent high, in my opinion, came from this high. We've come back down for a potential higher low for a higher high. Now, this intermediate point of interest has indeed been broken, so I'll be looking for a pullback short from that area, of course. However, you can see the overwhelming, in my opinion, better point of interest on the chart is going to be here. Once price comes back down to that area, then of course I will be expecting DXY strength potentially then to come out of the market. So tomorrow, indeed, I will take a deeper dive into the lower time frames, but that's just my general outset there on the DXY for now. Let's make it all make sense. So, DXY, we understand two methods of thought process. I know it sounds a bit sitting on the fence. We're either going higher or lower, but we do have confirmation on the shorts, but we do also have confirmation on the longs based on that weekly time frame. So we'll have to have a look to see what goes on, and then we'll use our cross pairs that we're going to be trade rather to understand whether or not we're even going to be getting involved in any of the DXY cross pairs anyway. So anyhow, higher time frame, weekly point of interest. I love it all the way to the left. It's looking good as a result of price. And again, I don't usually go this far in depth to the left. However, when it's obvious, we can see market made a beautiful move from this area here. Therefore, we will want to highlight and try and locate that point of interest by way of order block. There it is. Weekly order block on that weekly time frame. Not going to be trading from a weekly order block, as I always say, looking to refine those areas down as low as we possibly can. But the importance, again, like on the DXY, we haven't broken above this point of interest, this weekly 15-minute weekly order block, if I can get my words out. So therefore, I'm going to, at least for this week, let's say, be pretty much short bias. It doesn't necessarily mean, good afternoon, Rob. It doesn't necessarily mean I'm going to be looking to take shorts from that area. But what it does mean, if I can match the DXY up when the DXY reaches that point of interest again, when I refine those areas down, and also it makes sense on UJ, perhaps we've had some nice breaks or structures when we get to the market tomorrow. Let me just paint a picture for a good example. Call that a structure point just to eyeball it. I know we've got the wick there to the low, but if we wake up tomorrow morning and price has had this move to the downside, breaking most recent lows to the left, then of course, once price comes up, I'll be waiting for that confirmation on the DXY to take price back down. Let's see if that makes sense. We know the weekly order block is holding, and we want to be using that to our advantage. When we start to refine those areas down, you see where we are just about here. So I can understand if the DXY would want to move slightly higher. The reason why, if you take a deeper look again to that weekly time frame, if I'm within that weekly, you can see that daily order block up in those highs. As I said, we're looking to refine those areas down all the time. I haven't put the weekly, I'll do it so you can understand where we are. So refine weekly, there's a daily. Let's go back to clean the charts up. And then we have it. So looking to refine those areas down more and more as we possibly can. So Bryce is just making a gentle move back up, in my opinion, to this area for a nice, good looking short. Again, I'll be happy to see if price opens tomorrow. If it breaks structures to the lows, then I may well have to start moving my short point of interest slightly lower. As a result of just moving with the market. However, if we don't break this lows and price simply wants to start gravitating back up to these highs, then let me bring the importance back in on this order block on all intervals. Good, where are we? There. So, although this looks good on the 15-minute time frame, in fact, it looks magnificent on the 15-minute time frame. Currently, using this point of interest, we are only simply using that 4 hour order block. As a result of that 4 hour order, well, not only the 4 hour order block is doing a good job. So then let's go to the 4 hour time frame so we can understand that. So on the 4 hour time frame, price was evidently trending up. Then we've had this snap in the market, breaking clear structural lows in the market, and then we've just returned to that order block. So the first time we return to that order block, I would naturally be expecting a rejection or a reaction from that area. Now, the question is that the reaction from the area? I believe so, because as a result of that reaction, all we've done then is made a high into it, a potential higher low, confirmed as a result of that higher high. And have we really broken structure again as a result of basic price action and principles? As I say, one line will do it. Here is the structure point based on that confirmed higher high in the market. So if you're going to be looking to take shorts, you already know without a break of this area, then that short is an aggressive short scenario based on that 4 hour time frame. So with what we said with the DXY, we understand there are two thought processes. Now, for me to really have a confident looking short on UJ, I'm really going to want to see a 4 hour candle close below this area. It's nice that we've had one break of that 4 hour 50 MA. Why is it important? Well, look to previous history to the left. We were respecting that 4 hour 50 EMA beautifully. We've then had a break of that 4 hour 50 EMA by way of bearish engulfing candle on that 4 hour time frame. Now we're going to manipulate that order block left behind, and there it is. So two types of well, there's a couple types of entries, but I mean it's either aggressive or you're going to wait for the better case scenario. Of course, I love to talk about the worst case scenario first and foremost, where price just simply comes right back to your point of interest, and more often than not, those that trade smart money concepts aren't really sure what to do because price hasn't broken structure. It's just bullish on the way there. So for me personally, I would take those positions two ways. I'd either want to be taking that as a limit order if I feel that it's a valid point of interest based on everything that I'm taking into consideration. Let's say, for example, the DXY looks good. GU is looking as if it's going to start printing towards the highs, taking everything together. If GU wants to start moving up, then UJ as a correlated pair, negative correlation should move to the downside, DXY to the downside. If it all starts to make sense and the picture looks great, then perhaps I might take a sell limit. I don't think it's worth a sell limit, mind you, as a result of having this daily order block slightly higher. And based on the higher time frames, as I said, what's the point in doing your daily chart analysis based on higher time frames if you're not really going to respect it? For me, I see this is a much better area where I would be absolutely comfortable with taking a sell limit here. So what I could do in this instance, which is this area just here on the 15-minute time frame, is simply wait for a lower time frame break of structure. Am I wrong to do so? Absolutely not. Again, I feel that it could be slightly aggressive for a Monday morning, not really understanding the development of price action just yet. But nevertheless, once you refine that 4 hour order block down that was created by way of a bearish engulfing candle that would have broken at least one structure point in the market on even on that 4 hour time frame, but hasn't broken the key structure point. It is a risky position, but nevertheless, if you're able to then locate at lower time frame break of structure on your side, at least then you have something in favor that you can journal and say, well, I've actually waited for a lower time frame break of structure, 4 hour point of interest. The journal makes sense, right? You're happy to journal a loss when it sounds like that. That's my personal takeaway. If I can journal a good looking loss, I'll take it, right? In this instance, if I took that as a sell limit, it would be quite difficult to justify based on what I've said previously. But nevertheless, I do see this as a nice area tomorrow morning. So we just have to see how the cookie crumbles. As I've said, best case scenario, break of structure, play the patient game. Would then have a break of that 4 hour 50 mate again. So here's the clue. Then we've had the confirmation, price start printing bearish as a result of finally finishing that bullish trend. It would make sense, right? It's just having that confirmation, having the confidence in your strategy that price, if it comes back, great. If it doesn't, it is what it is. It's your strategy. You just got to wait upon it, right? I honestly, I couldn't. I mean, I took the week off accidentally, but I didn't really see too much that I would really want to be getting involved in anyway. I had my alerts on the chart, and To be honest, nothing really went off that I thought, okay, let me stop my round of golf and play and trade rather. So it's one of those, right? It's your strategy. If you feel like trading your strategy, trade it. But in converse, don't trade when it's not your strategy. So there's a difference, right? If you want to trade your strategy and it's in front of you, trade it. If you don't want to, don't trade it. But what you don't want to be doing is trading what's not your strategy. So that's UJ. I quite like UJ for shorts. As I've said, it can go both ways. We can understand why UJ would slightly want to go slightly higher. So this nice daily order block that I haven't refined just yet. I've refined it down to the four, and we'll see if price wants to get there. Then absolutely we'll have a look at a nice aggressive short. But that's UJ. Let me try and speed up the process for you guys since it's a Sunday. Right, AU. I do definitely remember AU, although it's been a while. Anyhow, higher time frame weekly order block, same rinse and repeat. Weekly order block, why? Well, this weekly order block caused a snap in the market that definitely broke structure points to the left. I don't need to zoom to the eternities to view that. It's not really what I do, but to paint a good picture, we can understand why price wants to come back to this area and at least give us a reaction from that weekly order block. That's as much as I'll go into the depth from there. What I like, again, based on the higher time frame, it's great to come to the charts and see that price action is respecting your higher time frame analysis, even down to the 4 hours. It's very refreshing to see that, which means you're just one step away. You're just a 15-minute break of structure, pull back into your point of interest, and off you go. It's as simple as that. So, weekly order block that held. Why is it important? Look at these candles here. Price failed for whatever reason. Price failed to break above. We take it as it is. We use those facts, we manipulate them, and we get trading. So, what I like from this weekly order block is first and foremost, price came in. As I say, one line will do it just to eyeball. We came in, and at some point from the weekly time frame, I'm going to say that this here definitely broke structure on the 4 hour time frame. If not, almost certainly broke structure on the 15. What I don't like, however, is this move would have broken structure in the 15 and probably on the 4 hour time frame as well. I have to have a look to see how the 4 hour order block held if I had one there, which would have been around about this area here. So I didn't have it in the charts anyway, probably because I wasn't looking at the charts to be fair. But anyhow, weekly time frame bearish engulfing candle 2 weeks ago on that weekly time frame. So we're just going to start that process all over again. I like it or not? It's annoying. I would much prefer to not see another higher time frame order block up at the highs here on AU, because my thought process for a couple of weeks now was that this is the bullish structure point on AU. I wanted price to break that bullish structure point first and foremost, break that daily 50. In fact, I think the bullish structure point was there. Yeah, does that make sense, Charles? So we had a high, higher low, confirmed higher high. Therefore, here's a structure point. That's the one. So what I wanted to see was some clues on AU before I really want to get involved on it. So here's the first clue. Break of that daily 50 EMA. So after that break, of course, I was expecting lower low, lower high, and it's a shame I've missed the lower low. But it's fine because after a lower low, what am I expecting? A lower high, hopefully up into this point of interest before a lower low continuation. Does that make sense based on potential DXY weakness? Unfortunately, it doesn't. So my alternate thought process on potential DXY long-term strength, however, this does make sense. So that's how we start to tie everything into a good picture and understand what pair is going to be better to trade. By the time, in my opinion, so I don't care if I miss price even moving further down. I believe by the time price comes back up to this area, the DXY would have moved enough to the high, well, enough to the lows then for a reaction towards the highs. If they were looking for a reaction for the DXY up to the highs, then I'm going to be expecting DXY strength, which should drive AU back down to these lows. Does that make sense to me? As a trader using technicals, spot on. So we're going to continue to roll with that until we've been proven otherwise. Also, what I like on the daily time frame, finally got that second confirmation of the break of the daily 50 MA. Of course, we understand the next daily candle, hopefully when it prints, we are going to be seeing a very bullish daily candle. However, we must now Lead on the side of understanding. Well, if all these previous daily candles close below that daily 50 MA, even if this daily candle is looking incredibly bullish above this area, I'm going to be expecting what? A rejection from that week, that daily 50 MA. I'm going to be expecting a daily candle closure that's going to look drawn to exaggeration, but you'll get the picture. Rejection of the daily 50 MA, wick to the highs, and hopefully we would be in at these up at these highs just here, and then we'll take price all the way back down. So that's the long-term thought process on AU. In terms of even the here and now, these are areas still that I would be looking to consider based on structure, because again, as I've said, these are my higher time frame points of interest, and all that is pretty illustrations drawn on a chart. Price doesn't give a damn about what I think about, or price doesn't give a damn about my illustrations on a chart. NMC, very good evening to you, my friend. Thank you very much for joining. Therefore, I've got to be slightly more reactive, which can also mean slightly more aggressive, which I'm happy to do if it makes sense. The first thing I'm going to ask myself is, Charles, what is the structure on the daily? What's the structure on the 4 hour time frame? Keep it simple. We are bullish or bearish. We're bearish. We're making lower lows after a lower low. Of course, I'm expecting a lower high for a lower low. That lower high may not be here. It could be here. Therefore, what I'm not, well, I'll put it in for now. We'll just see how it works out. Here is a 4 hour order block based upon, you've guessed it, 4 hour bearish engulfing candle, of which did what? We broke structure points to the left-hand side. Therefore, after a break of structure, lower low, I'm expecting a lower high potentially from here. Why would that make sense? 4 hour 50 MA. Why is that of any importance? Well, it wasn't doing anything here. We were in a range. We finally broke below that 4 hour 50 MA, came right back up, retested it, broke below, retested it, and off we've gone. So, therefore, if the price is up at this 4 hour 50 MA, based on facts, and more facts, what am I expecting? A rejection from that 4 hour 50 MA. Can I be wrong, and can I still have a rejection of that 4 hour 50 MA and also a rejection of the daily 50 MA within 4 hour, 1 4 hour candle? Absolutely, yes, I can. And I've seen it over and over again. So it's not far-fetched to understand that a good thought process would be, even if the next 4 hour candle that opens in the market, let's say London Open, and we're seeing a real bullish 4 hour candle like so, my thought process is going to be exactly the same. Reject the 4 hour within a 4 hour time frame, within a 4 hour time span, I should say, or within that 4 hour candle. It's the strategy. It's what I have to understand can happen. Therefore, taking a short from here is something that I'm very, very, very comfortable to do, because why is that on top of that as additional confluence? Daily 50 MA. If price does this in one 4 hour candle, comes up through the 4 hour into the daily, I'm looking at taking this short position. I'm not going to say, well, it would certainly be aggressive. It's not going to be a sell limit. The sell limit for me would be up at these highs. But again, lower time frame break of structure, I'd realign myself with the DXY. Does it make sense where, in terms of what the DXY is telling me? What's UJ up to? What's GU up to? What's EU up to? If it looks good, it's going to be a lower time frame break of structure and a short position from here, rejecting daily 50 MA. So we're going to have 4 hours for price to want to reject the daily 50, excuse me, the 4 hour 50 MA. Of course, we're going to have 21. By the time we get to the charts, maybe 12 hours for the price to want to reject that daily 50 MA. What I do foresee to happen, however, is as a result of a candle that large, although it's my strategy and I am expecting a rejection from it, if this is going to be a 4 hour candle that closes bullish, more often than not, what I'm going to see as a result of a candle that large is going to be a 4 hour order block in the inverse direction. Therefore, all that does to me is say, okay, Charles, you've entered here. This 4 hour candle's closed bullish against what you thought. That's fine. Once price starts to get back down to that 4 hour 50 MA, what am I going to have to do? Manage my position. Although I'm using the daily as rejection to the short, intraday perspective where it matters most, as I'm an intraday trader, I want to be managing my position by the inverse now and look for price. Well, I won't be looking for the long position, but it would be for me now to be forced to manage my position based on what the candle is telling me, based upon what structure is telling me as well. Because let's face it, if price is making these lower lows, lower highs, lower lows, and price breaks up here, what have we now created? A higher high. After a higher high, I'm expecting higher low, higher high continuation. So be smart. Okay, if you're going to be aggressive, be smart with the aggression, right? So I'm going to get in, understand where price could look to gravitate back down towards 4 hour 50 MA. Does it make sense for rejection from there? Move to break even, job well done. If price then rejects the daily 50 MA for the day and we start making that lower low on the 4 hour time frame, perfect. It's great trading. So that's AU. I think I've spent enough time on AU, but I think it's a great looking pair to take a look into. And I won't dive deeper into the 15 because let's face it, tomorrow morning we could have a gap all the way to the moon anyway. I hate to waste your Sunday. So that's AU. US dollar CAD, right? US dollar CAD. I think this is a nice looking guide in terms of what our thought process could well be for the DXY. Weekly time frame, and this is why I've left it on here as well. Weekly time frame, weekly order block. You know exactly what I'll be looking to do. Highlight that weekly order block, expect price to want to reject that order block towards the downside. Well, what happened last week? Candle closed above, guess what? The weekly order block. Therefore, simple process. Order block hasn't held, removed. What's price actually done? And I haven't put this drawn on. This was from last week, actually. Price has made, unfortunately, a higher high. Well, it's not fortunately. We don't have any bias to the chart. We don't mind. This also still on from last week because, well, we didn't have an order. Well, we had that weekly order block granted. However, that order block had been mitigated instantaneously as a result of this bearish engulf, this not engulfing, this bearish candle closure. This next weekly candle tapped in it straight away and mitigated it. Therefore, it's available, but you'd want to be looking for a bit more from it, right? Therefore, what I was looking at on the higher time frame, well, not as high, but the daily, to really understand where could price want to look to gravitate towards. Was that as well because I didn't have an available daily order block? Not too sure. It's a new week anyhow. So we've closed above. This is the thought process. We get rid of it. So am I looking now for immediate shorts on US dollar CAD? Unfortunately, before I say not, looking at that 4 hour time frame, do I have any reason to be looking at shorting that without any higher time frame point of interest to guide me to take that short position? See the difference between what we've already gone over and what we have in front of us now. No weekly order block that's available for us to short from. Therefore, we can't even begin our refinement down from the daily. Let me just double check that. No, we cannot because using an older daily order block, again, that was used and abused and mitigated. What's the importance? Prices close above it here on that daily time frame. So we can't even begin our process on the daily time frame. Therefore, what I'm going to have to do is revert to the highest order block that caused the most recent snap in the market. With that said, that's all the way up here. So that remains there for price to want to reach to that area. Now, what's the importance of that? Well, the importance of that is using the DXY as we did initially. What are we expecting? Potential DXY, potential room for the DXY to move slightly higher, back up it to its higher time frame daily order block. Where are we? Up at these highs potentially, or even if the DXY is to creep back up to these highs, potentially we could have the same type of movement on US dollar CAD moving to the highs. But at the moment, I don't see any reason why US dollar CAD is going to look to slow down. Of course, I could be wrong, but even looking to the left on the 4 hour time frame, what's the bigger picture? We made a low from here, therefore here was a point of interest in the market. We've hung around, but most importantly, higher high. We've come back down, higher low. What have we done? Higher high. So of course, I could expect a pullback on US dollar CAD, but that's not really telling me I should be trading that pullback. But what I would be interested in is a potential long position because I can build up my bias from something that makes sense, at least based on the EMAs that are on side. Previous weekly candle closed above that weekly 50 MA. Most recent daily candle, of course, have closed above the EMAs. Why is that important? Well, every time we come back down towards those EMAs, we're looking to reject towards the upside. So that's telling me, all right, you might well miss a position on the short. Is it even missed if it's never there for you to take anyway? Or does it make sense to take a nice long position that makes sense based upon EMAs that could be looking to that would look to reject towards the upside? And if I put a spanner in the works, we'll just put a weekly order block right down at these lows, and I'll put a most recent weekly order block in on the charts as well. That will help us to, in fact, guide the opposite thought process of what we have on the DXY and look at that for a nice long position. So if I put that on all intervals, look at that, how that starts to make sense. Granted, not sure if there's anything on the daily that I could look to refine. it's going to be a little bit too high. So, and what I mean by that is I want to start refining that weekly order block down. And the lowest order block that I have available is this one here based on the 4 hour time frame. In fact, is that actually available or have I just put that in? Let's see. No, that's not quite. Let's see. I'll keep it there for now and I'll put in a more accurate one. So what I'll do is just revert back to that daily time frame again. Let me double check. So here is definitely a daily order block in the long position. And then what I'll do is place that on all intervals and then see within this refined area whether or not I can then have a newer refined area that makes complete sense. So anything here, negative, 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 anything there, that's a little bit too high. Nevertheless, it's guiding us towards this area. So I will put it in on the charts. And what I'll do is simply, when price gets to these areas, just have a look to see what's going on. But for me personally, that's going to be a little bit too high because by the time price gets down to those areas, really, what am I expecting? I'm really gonna be expecting price to start gravitating towards those EMAs in the long direction. So I'm not gonna be too quick with those long position on US dollar CAD, but that's fine because even with the pairs that we've gone over and pairs that we have remaining, it's still looking pretty good across the board, in my opinion. So even if you have to sit out US dollar CAD in the longs and even in the shorts, that's fine. It's just going to go to the back seat for now. And again, 15-minute time frame, I'll go over that tomorrow at some point as it starts to make sense. But this 4 hour order block right there at the lows that isn't available. Well, it's available based on the fact that price hasn't broken below it and closed below it, but we have tapped it already. And looking at the 15-minute time frame, sorry that it's all zoomed in, but what we can see here is we still have a nice 15-minute order block just like so, which is the only available 15-minute order block refined within that 4 hour. So of course, in terms of the 4 hour order block, there isn't reason for price to want to gravitate back down towards it. However, when you start refining that 4 hour order block down, there most definitely is a reason for price to want to start gravitating back down towards that 4 hour order block. Why? Because there is a 15-minute order block refined within that area, and the 15-minute time frame is the time frame that I like to trade from. Therefore, that remains my best point of interest for the long position at this time. And would I be looking at taking that as a limit order? Probably not, because you've got ample time to wait for price to come back down, even if you want to take that aggressive, nice 1 minute break of structure. What I mean by that is, although it's classed as aggressive, it's still a very patient approach. We're seeing price starts to print down like so on the 15-minute time frame. Now, the 1 minute time frame is going to look, of course, the same. However, in let's say this leg, well, I'll draw it in on any time frame. It matters not. Most recent lower high in the downtrend, this is the safest opportunity to look for a position, pull back into an area of interest. There we go. So that's best, in my opinion, to locate on the 15. However, if you don't have that break on the 15 and you get your lower time frame break of structure on the 1 minute time frame without price breaking that, that's what I mean by aggressive. Therefore, where do you think you must manage your position by? Of course, structure point of which could look to take price. Whoops. Where have we gone? Oh no, was going to be quite a nice drawing, I think. Structure point where we would be anticipating price to be taken back down to the lows based on the most obvious structure. You see it right there, right? So without the break on the 15, it's aggressive. Simple as that. That's US dollar CAD team. Not the best, but certainly not the worst. I don't mind it. GU. Let's have a quick look at GU as well. High time frame GU. I don't mind it. High time frame weekly order block to those highs. Again, it's not really playing too much with the charts. It's good to see that price came in at some point a couple of weeks ago, rejected the downside. So it shows me that my smart money concept in the way that I'm seeing it and reading it makes sense on the higher time frames. When I start to refine that area down, however, we are a bit of a way away from those highs again. So am I really anticipating price to come up to these highs? Not really, but if they do, I'll be there looking for a short position. The reason why I say not really is because Well, daily time frame it could have been a lot better, but what I like about the daily time frame is we're still yet to tap into the higher time frame order block that we may well be looking for this from this order block. So we've definitely got room still to trade short to the downside. So I like that first and foremost, meaning that although, as I said, one line will do it, although we haven't broken structure points on the daily, what I do like is we have at least range back down to these lows on that daily time frame where again I could be wrong and price could just take off from that area. So I'm happy to see that. Now, do I have an order block to support my thought process to potentially look for a short position that isn't from these highs on that weekly time frame? Let's have a look and see if it makes sense. So, daily 50 MA first and foremost. What's the significance, Charles? Well, for some reason, price is respecting it. Therefore, when price wants to return back to that daily 50 MA, what am I going to anticipate? I'm going to anticipate price to respect it on the daily time frame. What I don't like to see in around that area is these wick to the highs. That suggests to me that I won't call it manipulation, but it suggests to me that taking a position instantaneously when price actually taps into that daily 50 EMA could be slightly premature because although this candle closed below that daily 50 EMA on the lower time frames, all what this wick is a beautiful lower time frame trend up towards the upside and then prices just closed below on the daily. So it's telling me maybe take it a bit easy there, Charles, in terms of an aggressive position because also you've got enough range to take it easy because here's your target to that refined daily order block down. Well, that's a weekly, but you see it clear here. Nice refined order block. Well, what will be a refined order block down here on the daily time frame. So there's all the reason to be nice and chilled when price comes into that order block. So daily order block, looking to refine that area down. We've spoken about the daily 50 MA. Now here's a 4 hour. A bit of conflict. We love conflict. So 4 hour price action and structure. What's going on, Charles? Well, for me personally, if I get rid of this now while I'm on the call and see if I view it slightly differently, what I'm seeing, GU, we can trend. Therefore, if I can identify a trend as easy as look, trend up or down, what are we doing? Evidently something in between. So I will redo this in my basic format, very childlike, but it works every time. So we've had a low created. Lower high, what am I expecting? I would be expecting a lower low at some stage. Did I get it here? No. Did I get it here? No. We created an equal low. So that is, for me, first and foremost, the first potential sign of a range. Now, after what potentially could have been a low, we then had price to come back up to this area as a result of 4 hour order block left behind. Can we now make the low? Guess what? Rejection again. We didn't make the low. Therefore, what I am seeing at the moment on G is we're making clear lows in the market and we have clear highs in the market. Therefore, for me, at the minute, it's maybe looking at like we could be entering into a trading range. But and on the 4 hour 50 EMA as well, that's a clear sign. When the EMA starts a trend through price action, we're ranging. So we don't have it quite just yet on the daily. As a result of course, the lag on that daily 50 MA isn't as dynamic as it is on the 4. Now, I can start to see that the EMA is not as reliant here. We've broken down, we've come up, we've rejected it, broken back up, and we're just hovering there at the minute. So, why I've put this 4 hour order block, just to give you guys a nice example, is I would be happy to trade from this order block if it had done something. And what I mean by done something, break structure points. And why? Because I'm in the range, I don't want to be trading short mid-range. We know what's going to be happening to the range. These areas where it looks very obvious and evident for a position to be taken short from, they're going to be happy that they're going to roll into profit. However, price is, of course, in my opinion and with my statistics, based on how range is at, price is going to want to gravitate towards those highs. And when price wants to gravitate towards those highs, what's going to happen on the range? Those immediate short sellers, again, based on my statistics and what I see across the market, those will be happy when price starts to roll in the direction of short, but we know what's going to happen. Price is going to want to move towards those highs first and foremost. Now revert to back what we said about the daily time frame. Look at that wick. The wick is something that we do not want to be caught out on because once we see price trending back up towards that daily 50 MA, of course, we're going to be getting excited that we're going to reject it for the day. But don't forget, we're going to have 12 trading hours before that daily candle closes anyway. Price could gravitate all the way back up here and then still close below that daily 50 MA. That's what I'm expecting. Why? It's happened before. Can it happen again? Absolutely. All we do is use the facts over and over and over again. As the facts change, we change our bias and apply our strategy to it. So therefore, for me, sell positions are only going to be coming from those highs of the range at the moment. Is it going to be a sell limit? Absolutely not. Not on the range. However, up at these highs, that's what I do like because the most recent low that came from the market on the 4 hour time frame that broke structure points to the left came from that up at those highs. Is there an order block up at those highs? Yes, there is, right up here. And again, as I've said, not so much far-fetched, but it would be us returning back to this weekly order block, which would I be happy if price came back up? Well, we certainly haven't broken highs on the weekly time frame. I'd be less happy. Can I say less happy? Yeah, I guess I can get away with that. If price broke up above these highs and then pulled back down, then I'd be very reluctant to take a short position from here because for me, higher high, higher low, higher high, I'm taking out of my short position. But what I am seeing, respecting of that order block, yes, we haven't made a low from there, but can I get a reaction from there perhaps to at least take me towards break even? Yeah, maybe. And that's my job pretty much done. Protect my position, protect my capital, trade my strategy, and keep doing that until the percentages just stack up in my favor, which happen just it just happens, guys. You just have to trust me. When you just stick to your strategy, it just happens, believe me. Right, so that's what I'm going to be looking to do. Best point of interest up at these highs. If you want to get involved in the range, here's the position to do it. Should you take that immediately? In my opinion, no. Wait for price to do its thing first. Wait for price to then break those structure points on the 15-minute time frame. And while we're here, may as well show you that 15-minute time frame and give you a good illustration of what I mean. We have an understanding that we could well be in a range, right? So therefore, on the range on the 15-minute, even on the 15-minute time frame, so that's a 4 hour order block imposed now on the 15. It's looking quite clear, right? There's no real clear trend. So as price starts to come up to those highs, where's my pretty illustration? There you go. As price starts to come up to those highs where we do want to be shorting from, I'm not going to be taking that immediately. I'm going to expect price to push up. As price starts to push up, pay careful attention to price action. Once you then get that break of structure, understand what's going on. We're trading a range still. So one line will do it. Structure points on the way up that were created as a result of higher highs and higher lows. Wait for the most recent higher low to be broken. Hope there will be a 15-minute order block left up at those highs for you to manipulate. Then once price returns back up to those highs, you now are in sync with trading the range. Double check what's going on the DXY, potentially EU as well, to see if EU is looking to short. Even though EU isn't in a range, it'd be a lovely confluence to grab to see if EU is going to short from that area. And then that's going to be a perfect looking range position, in my opinion, based on all the information we have previously and the facts as well. Then again, final port of call, does it make sense? Do I need to trade it if it's the only thing available? You might want to take it with a slightly lower risk. It's a range. Ranges, they're manipulated both ways. But I have developed a way to be slightly more patient in the range, understand what goes on in the range. With that said as well, last point to touch on, and I promise I'll skip to the next pair. Although we're using this 4 hour order block on the range, just because the 15-minute time frame starts to trend above, don't be fearful. You have a 4 hour period for price to still reject that 4 hour order block. So even if this is the 4 hour candle, the 4 hour candle can still do even just that. Even that, for example, and leave with a beautiful wick where we've trended above on the 15-minute time frame. That wick entry is all you've had here is price on that 15-minute time frame pull back, and that's the entry. I've seen it over and over again, and I will hopefully continue to see that. So that's how you're going to be looking to manipulate that range from GU. Nice and basic, easy, easy, patient, patient, patient. Just wait for price to develop. If it doesn't develop, leave it alone. Simple as that, team. Next, EU. Why I like EU? Because initially I thought EU wasn't in the range, but we'll have a quick reanalyze to see if I'm right or wrong. Nevertheless, it's weekend, so we'll give ourselves a break. We can be wrong. Right, higher time frame analysis. Weekly order block, looking for price to want to short down from that area. It's mitigated, it's been tapped, we've had the reaction from it. I'm a bit reluctant to put another weekly order block in here. It's going to really clog up the chart. As a result of last 2 weeks ago, we've had that bearish candle closure. There is a new weekly order block in that area, but I'll keep it off because we are still looking for, in my opinion, both directions here on EU, and I'll explain for a moment why. So, with that said, refine this area down. So we want to be creating a nice trading range. We know we want to be trading from on the higher time frame, that weekly order block. When we refine that weekly order block, got a beautiful daily order block just here that's available. So of course, best place for a short is going to be coming from that daily order block refined within the weekly, and so on and so forth. And if I'm not mistaken, that order block is right up at these highs. So again, can it happen? Perhaps. Would I need to be a little bit more dynamic with what's going on price action here and now? Perhaps as well. So I'm not going to potentially just wait and wait and wait and wait for my best places in the chart for price to show up to. We can still act a little bit more dynamic only if it makes sense, right? So knowing that price is probably closer to the long than the short, we need to understand, well, does that make sense? First and foremost, daily 50 MA, that's against us. That's one thing that we need to understand straight away. If we're going to be trading long up into this area, we are going to be trading into a daily 50 MA where price is going to be wanting to reject for the day. Does it mean we're going to reject it immediately? Nah, maybe not. There is a better place up here. And also, as I always do, as I'm marking the chart, I start to see things in the chart that I've missed earlier. Again, daily order block. And I do like that because guess what? That's available. It hasn't been mitigated. So price action hasn't touched that just yet. Can I use this daily order block that's been created as a result of a bearish engulfing candle that broke structure points to the left-hand side just here in the immediacy to give me this type of confirmation that we've had a low, potential lower high, lower low, lower high back into the order block, lower low continuation. Do I really have room for the lower low? The only thing that's helping me there is a weekly 50 MA to understand we could get a rejection from that weekly 50 MA. So anytime price is above that weekly 50 MA, don't forget 5 trading days for price to want to reject that to weekly 50 MA to the downside. So I like that. It's just really the range. Where am I trading it down into from that refined area? So that refined area, you see, I've just put it on the chart just here on the daily. Refine that area down. There we are on the 4 hour time frame. So as we start to refine and refine and refine this order block down, we will indeed have decent enough range, at least down, let's say, to the 4 hour 50 MA, and the 15-minute time frame will back that up slightly as well. So here is that 4 hour order block refined within the daily. You see that 15-minute order block still there. Haven't added that in. That was still there from last week, as you can see. Therefore, it still remains a nice point of interest on the chart. Am I going to be taking that immediately? No, I'm not going to be taking anything immediately, to be quite honest. However, I do definitely see that as a nice point of interest for a good looking short position down from. Makes sense. Price action currently as we speak. Most recent 4 hour candle closed below the 4 hour 50 MA. So currently, here and now, the 4 hour 50 MA is actually on side, as well as the weekly. So that short, as we speak, looks really, really great. So I like that. More on EU tomorrow. It could well be a nice. I mean, there are loads of nice looking positions in the day. But that's EU, just touched on for us to have a good look at. GCAD. GCAD for me is going to probably sit on the back burner. It's a bit of a shame, but it's one of those. It's telling me, well, there's certainly better pairs out there. Charles would be looking at trading, so just let it go. Why? Let's have a look. So nothing on the weekly time frame in terms of weekly block and order block selection. I'm only using wick imbalances. They are a powerful tool, but it is a slightly riskier because with the wick imbalance, what you need to understand is when price gets up into that, if I get my words out, up into that wick, it's more often than not that price is going to be in an upward trend to it, and you're going to need to, as I've done here, as you can see, highlight structure points. Was that done last week? Probably, because I don't remember doing that now. You got to be highlighting structure points on the way back down because evidently higher time frames, even higher high, higher low, higher high. Look to the left on the 4 hour time frame. Do I have any reason on the 4 hour to actually be looking for a short position? No. Let me just double check. No, I'm incorrect. Yes, we do. So let me just pop that in. So daily order block refine. Here's the weekly. So let's start the process again. Here, excuse me, here's the 4 hour. Off we go. Bring that more. No, that was it. Yeah. Look at the importance. What have we done? We've closed above. Therefore, we get rid. Sorry to waste your time. So therefore, even to get the best type of wick imbalance type of scenario, especially as it's a new week, just got to highlight a point of interest in the market, I would say on the 4 hour time frame. Once we then have a beautiful 4 hour candle that actually wants to close below an area in the market where you can just eyeball, it's as simple as that. At that point, then we can at least journal and say, well, okay, we were making higher highs, potential higher low for a higher high. We've had a 4 hour candle close below an area in the market where it's failed to do so before. Look at the wick. That's a good sign that when we get a bearish candle closure below, that could be the first sign of the low in the market. Once we get that low, expect price to come back up to these highs for a lower high, lower low continuation. And then although it won't look like much on the 4 hour time frame, it's just going to be a bearish 4 hour closure below a little area in the market. On the 15, what you are going to see is these points in the market on the way up that you would be expecting price to really want to respect on the way, let's say on the way back up as, oops, where's my cursor gone? Um, what's going on? Too quick. You would be, or we would be expecting these points in the market to be respected. What that 4 hour candle is going to do is break structure, then pull back, and it's a standard ball game, guys. So at the moment, not too much to work with, but to get the best type of entry or the best kind of looking setup, you're going to really be wanting to see some structure points be broken to the upside. In contrast to that, well, Charles, since you're looking for so much to be broken in order to take a short position, how are you going to, why are you not going to take a long position? I will, only until in the immediacy we get a daily candle closure above the daily order block. And then what am I going to do? What I've done with all the rest, delete it. And then my next port of action is going to be, okay, higher high. Expect the higher low. Where from? I'll locate an area in the market and then look for the higher high continuation. Simple as that. But until I do not get that bullish candle closure above that daily order block, I'm very much so short bias, regardless of what price action is doing above it on the lower time frame, is how that daily candle performs, of which is important. However, if I miss every single short and then price comes down to these lows, then absolutely I will definitely be looking to take a long position from some of these areas. But we won't go into that just now because it's not really relevant just yet. So yeah, that was my only position last week, GCAD shorts, and I think that was a nice 1 to 3. Yeah, easy. Nevertheless, last pair. I don't think I marked GJ, I'll be honest. I didn't, team. So I'm going to leave it there. I think you've all joined me for well enough time. I hope that makes sense. Sorry to go through it slightly quicker than I would like to, but definitely I am back. I feel like I'm back in the market. It's already in sync. I see what I see, and I'm happy to be back with you guys. So thank you very much for joining me. Wags47, I always forget your name for some reason. Rob, I'll never forget your name, my friend. I hope you're enjoying Italy. I'm about to leave the UK, so I hope I can take a bit of the sunshine with me back to England for a bit. And then I'll return and join you in Milan, my friend. But until then, guys, everyone else as well, thank you very much for your patience with me for the last week. I will definitely add another couple of sessions in for the one that I missed, I think, on Friday. But nevertheless, appreciate you all. Take care. Good evening, everyone. All the best.